Ladies and gentlemen, good day and welcome to Sugs Lloyd Limited Q3 FY26 earnings conference call hosted by Orium Connect. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Ms. Janvi Patil from Orium Connect. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to all of you. I am Janvi Patil from Orium Connect, representing the investor relations team of Sugs Lloyd Limited. On behalf of the company, I would like to thank you all for joining us for the Q3 FY26 earnings call. Before we begin, I would like to state a brief cautionary statement. Some of the statements made during today's call may be forward-looking in nature. These forward-looking statements are subject to certain risks and uncertainties that will cause actual results to differ materially from those expressed or implied. These statements are based on management's current expectations, assumptions, and information available as of now. Investors are therefore advised not to place any undue reliance on these forward-looking statements when making any investment decisions. The purpose of this call is to share insights into the company's business, performance, and financial results under review. Now I am pleased to introduce the members of the management team present with us today. Mr. Santosh Shah, Managing Director and Promoter. Mr. Satyakam Basu, Chief Executive Officer. Mr. Vicky Kumar, Chief Financial Officer. With that, now I hand over the call to Mr. Santosh for his opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone. Thank you for joining us for Quarter 3 earnings call for financial year 2026. I am Santosh Shah, Chairman and Managing Director, and I am joined today by our CEO, Mr. Satyakam Basu, and our CFO, Mr. Vicky Kumar. I want to thank you for your continued partnership. At Sugs Lloyd, we view the current year as a period of significant operational scale. While market dynamics fluctuate, our internal focus remains steadfast on one thing, that's execution. Our performance over the last 9 months reflects consistent scalability. We achieved a total revenue of rupees 185.6 crores for the 9-month period, which is a 60.62% increase compared to same period last year. EBITDA stands at rupees 28.17 crores, up by over 58.5% with a healthy EBITDA margin of 15.18%. Profit after tax reached 17.92 crores, a growth of 53.5% over the previous 9-month period. While our core fundamental remains strong, we encountered a specific headwind this quarter. Revenue remained short by around rupees 20 crores due to a land dispute in one of our projects in Maharashtra. Now, since the dispute has fully been resolved, consequently, this revenue has been deferred and will be recognized in the upcoming quarter. Historically, Q4 is our strongest period, contributing approximately 30% of our yearly revenue. However, for the current year, we anticipate an even more robust performance. This financial year, we anticipate to overachieve the projections given earlier. We are currently in high execution phase, focusing mainly on 5 priorities. First priority being improving receivables. The team is working relentlessly to improve realizations. A special task force is in place and we are already seeing a decline trend in our debtors to revenue ratio. Second, we are working on expanding the contribution of niche products. We are increasing the revenue share of these niche products and are in active discussion with market drivers to deploy our fault passage indicators at a national level. Third, we are diversifying into EHV transmission. We intend to tap the transmission segment. We have inducted senior personnel with exemplary track records in EHV sector and have already bid for multiple transmission tenders, including high-tech GIS substations. We expect transmission vertical to start contributing to the revenue from next financial year. Fourth thing which we are working upon is our operational efficiency. As I have mentioned earlier also, Sugs Lloyd is a system-driven organization. We are developing new proprietary digital tools for imminent deployment to further enhance project monitoring. Fifth is execution excellence. We prioritize execution alongside order booking. Recently completing landmark projects such as hostel building in Odisha, rooftop solar project in Bihar, and the NTPC project in Delhi, entirely in line with our motto, on time, every time. We are moving forward as planned. We have a current order book of rupees 418 crore, providing a clear visibility through financial year 27 and a qualified bid pipeline exceeding rupees 1,000 crores. Additionally, in transmission, we have started bidding. Revenue contribution will start coming from next financial year. Furthermore, we have participated in several major tenders through pre-bid arrangement with a PSU for additional projects worth rupees 840 crores. Evaluation for these are currently underway and expected to be closed within the next month. All these follows our strategy to achieve the goal of rupees 1,000 crore revenue by financial year 2028. Thank you for your partnership. I would like to open the floor for your questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh Singla from BTG Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes,
Yes, sir, you're audible.
Yeah. So, sir, maybe if you can just remind us, like, what was the guidance earlier which you gave for FY26, and considering that there were some projects which were deferred in fourth quarter, so can we expect that fourth quarter will be around 40% of your annual revenue this year?
See, on the particular figures, we may not be able to speak much, Rajeshji. But as I said, the historical performance has been like the Q4 contributes around 35% of the total revenue. And this year it is going to be even better than that because of deferment of a portion of revenue from quarter 3 to quarter 4.
Okay. And sir, what was the guidance which you gave earlier? Like last time, I maybe missed it earlier. Like, what was the guidance which you had given earlier?
Last year, the projection which we have given, 270 crores projections we have given in various documents.
For the whole year.
For the whole year.
Okay. And you're saying that we are going to exceed these numbers this year, and maybe fourth quarter will be quite significantly higher than the third quarter because of the deferment of some projects.
Yes, we are very much hopeful of overachieving the guidance which we gave earlier.
Okay. And so your target of FY28 is around 1,000 crore. So this year probably, let's say, assume we'll do around 300 crore kind of revenue. I'm not saying that we have communicated this number, but just assuming that we will do 300 crore kind of number. So next year, can we expect that given 600 crore is the midpoint for reaching 1,000 crore in FY28? So are we well financed for reaching those kind of target in FY27?
Yes, Singlaji, we have made arrangements to fund such growth, and one of the steps what we have taken is the kind of bank facility we were having earlier from the bank. We are almost doubling it. So some of the sanctions have come and some of the sanctions are in process. So we are going to fund this growth majorly by debt.
Mm-hmm. Okay. Actually, maybe last question, so I will come back in the queue after that. So, what will be the share of transmissions as we are entering the transmission segment, given the long gestation period of transmission project? So, what kind of revenue we can expect from transmission segment in FY27?
See, in transmission, we are starting mostly with substation projects. The tenders which we have bid so far, these are substation projects. And these substation projects gestation period is not that high as compared to transmission line. So anyhow, we see we may not be able to comment at this point in time what will be the contribution from transmission, but yes, it will become the third biggest contributor in the revenue in next financial year.
Okay, so we are basically saying we are basically we can say the plan is ready to reach to 600 kind of midpoint to achieve our 1,000 crore goal of FY28.
Yes, we are very confident of that.
Thank you, sir. Thank you. I will get back in the queue, sir.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Vaibhav Mishra from Fin Investors. Please go ahead.
Hello, sir. Good afternoon. So my question is regarding the margin profile that we are having. We are having a very good profile of margins, around 15% kind of margins. So as you have already communicated, the growth guidance and the plans for FY28 are all intact. So the margins, can I get the margin profile for FY27 and 28? Are we confident of maintaining the same margins, or there is scope for improvement or something like that?
The margins will remain on the same lines. It may further improvise a bit, but this much margin we are very much confident of maintaining it. There are few reasons for it. One reason is this electrical or the power T&D market. It is a matured business where the margins are like this only. There is not entry barrier are high, so we do not see so many new players coming. So that is a matured business we are into. Second is solar EPC. In solar EPC, whichever project we are executing, these are of scattered in nature, and we do not see that kind of a severe competition which we see in generally ground-mounted projects. So we are, and then our niche products, that contribution is going to increase as time passes. So we are confident that these bottom line will move towards north only.
All right, sir. And sir, what can be the contribution for FY26 and FY27 for our niche products? In overall
we are working. We see it should be somewhere around 10% of the top line.
in FY26 or sir in 27? This.
Yes, it will grow like that, 26 and 27.
All right, all right. And sir, one more question regarding the order intake. I think in last Concall also we said that 800 crores worth of orders are under evaluation, and we expected to get 20-30% kind of orders from that, 800 crores in 3 months. But I think we have got close to 120 or some crores, I think, or 100 crores kind of orders. So what order inflow can we expect in this quarter? I mean, with what order book can we finish FY26, and what, as per your calculations, what order book do you see when you end FY27? I mean, next year when you are ending.
See, we have an order inflow of around 120 crores or 130? 120 crores in last quarter. And in this quarter, because majority of those orders has to be finalized in this financial year, so we see there will be a further enhancement in the order inflow. So in any case, we see somewhere around 200 crores additional order book, 150 to 200 crores additional order book in this financial year. Plus, we are working on some very big tenders. If those we are able to click those, then those tenders they are in themselves having a value of around 650 odd crores.
All right, sir. So suppose, sir, if we close FY26 with the order book close to 600 crores, so that will be executable entirely in FY27. Will we be able to execute it, or we have to complete around 500 to 600 crores in FY27. So I think 600 crore order book is must in that case, correct, sir?
600 order crew, the entire order book will not get billed in the next financial year. 600 crores order book will be on 1st of April. But during the other these things, we will be having future order inflows also. So all the
small timeline orders. Okay, got it.
Yeah. So what do we say for having a revenue of let's say 600 crores over the period, we need to have a inflow, or we need to have an order book of around 1200 crores or 1000 crores to 1200 crores to achieve that 600 crores, and that much volume is there. That much of tenders are in pipeline. We see that, and it's very much, we are confident of achieving those.
Okay. All right. Thank you so much, sir, for your time, and all the best for the future.
Thank you.
Thank you. Participants who wish to ask question may press star and 1 at this time. To ask a question, you may press star and 1 now. The next question is from the line of Disha from Sapphire Capital. Please go ahead.
Hello. Yeah, hi sir. Am I audible?
Yeah, Disha, you are audible.
Yeah. So just my question was again on the inflow, sir. I think we last time had mentioned 800 CR was the big pipeline in December when we had the call. And then you said we'll convert out of this 20%. So I think 160 CR approximately we were expecting the inflows to be for the second half. So what's the update on that, and what sort of inflows are you expecting for Q4?
See, as I said, out of 160 crores, we achieved 120 crores. In fact, we have achieved a few other orders also, but formal LOA has not been released. That's why we are not able to publish it. In this coming quarter. In this coming quarter, we expect an order inflow of around 200 crores, please.
200 crores for this quarter, right?
Yes.
Yeah. Okay. So for the exit order book target for this year, what will that be? I think we're expecting 125 CR execution in Q4. So are we well on track for that?
Yes, we are trying to achieve 125 crores, but let us see how much we are able to close. But it will be better than the projections what we have given.
Okay, fair enough, sir. And for this extra high voltage segment that you mentioned, what sort of bids have you already placed? And I believe the margin in this segment would be much better than what we have traditionally seen, I think around 9 to 10%. So if you could just throw some light on that, that'll be really helpful.
Yeah. We have a bid for two projects. One project is for Himachal Power Transmission Corporation Limited. That is a GIS substation. And another tender which we have bid is for Power Grid Corporation of India Limited. That is also, around 150 odd crore tender. And as you said, the margins in EHV segment is comparatively better than the medium voltage segment.
Right, so you have any number for that, sir? What sort of range can we see?
Not at now. It is just at bidding stage.
Right. Okay, but sir, as we go ahead, so as the niche products contribution increases and as we get more revenue from the EHV segment, can we expect this 15% odd margins that we currently have to improve year on year?
Yeah, that's what I said in the last, in reply to the last question also. We are quite confident that it will move towards north only, this margin.
Okay, all right. Okay, that's it from my side. Thank you and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Jignesh from Jiva Capital. Please go ahead.
Yeah. So, sir, considering the scenario in which solar is right now, there are some delays, like you also saw some delays due to land issues and maybe because of best prerogative of the government. So, out of our order book that we have, do we also foresee any kind of such scenario or risk building up in FY27?
Yeah, very nice question, Jignesh. I would just like to add further clarity on this. In the total order book or total revenue which we projected for financial year this 25-26, is hardly any. We are having only 3 projects which are of ground mount. 2 of them are in Maharashtra and 1 of them is in Himachal. Rest all of our solar projects are rooftop mounted projects working with governments. So we have not seen any such issue in our rooftop projects. In one of the projects in Maharashtra we have seen, and we do not have, neither we are much bullish on ground mount projects henceforth. So we don't see such kind of problem, occurring again in the future tenders, in future projects.
Right. Okay. Sir, another question. Since our group, we are expecting a very fast growth going ahead. So, and since our business is more of a Q4 kind of is the biggest quarter, so generally our cash flow is not positive at the end of the year. But going by various business segments that you are in, so will we be dependent apart from the banking facilities that you plan to double? Will customer advances from this new order will also help us 30-40% in using the working capital requirements for all these projects? Or broadly wanted to understand how much is the customer advances for all these various segments that you get?
The customer advance, it differs from project to project. In majority of the projects, they do give a mobilization advance of around 10%, but in some cases it is interest bearing, in some cases it is interest free. So wherever it is interest free, it makes a sense, it makes a commercial sense for us to go. But in case it is interest bearing, it does not make commercial sense. So it depends on the situation, it depends on the time when the project has been, bagged, whether we should go for it or not. As such, we do not have a policy that wherever advance is there, we will take those things. It entirely depends on the situation. It entirely depends on the cash flow at that point in time.
Okay. And so related to this, suppose, sir, we are targeting FY28 1,000 crores of revenue. So broadly, what kind of working capital absolute amount we will require? Can we say that around 250-300 crores would be the amount required?
Yes.
Or more than that?
In a broad sense, the working capital required for our kind of projects stays somewhere around 30%. So 30% working capital is sufficient for us to, meet those revenue figures.
Okay. So this banking facilities that you are tying up will be sufficient for that?
Yes, we are pretty confident of that.
See, this is Satyakam Basu here. I will just add one line to what sir said. Working capital is reviewed very periodically, and definitely the numbers that we are expecting to achieve in FY27, for that we have already organized our bank lines, and as sir said, some sanctions have come and some are on the way, but it's sanctioned. And depending upon how much we achieve and what we will be achieving for FY28, if required, we will enhance it. But we are very confident that is not will be a hindrance.
Okay. No, sir, my only question was like in last 2 years, many companies had the opportunity to dilute further and get it very easily from the capital markets. But I don't think that time is now for next 1 to 2 years. So there can be some stress going forward. That was only my hunch.
Yeah, I got your point, but as on date, we do not have any plans for further dilution.
Oh, okay. Right. Thank you very much, sir.
Thank you.
Thank you. The next follow-up question is from the line of Rajesh Singla from VTG Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity again. So, sir, regarding the working capital, just to follow up on that, which discussion we were already having. So you are saying that we are well funded for the next year. We have already enhanced our limits. So most likely next year, let's say we are achieving 500-600 crore kind of number, and that would be around, let's say, 50-60 crore. So those internal accruals will also help us in financing the growth for the next year, like FY28.
Yes. So as I said, for FY28, this 1,000 crores revenue would need a working capital or a facility of somewhere around 300 odd crores. So 225 crores we are having this year. The debt will also get further enhanced in next year, and then internal accruals will also come into play. So from funding point of view, we do not see any kind of hindrance going forward.
Excellent. So second question would be on, sir, inflationary pressures which we are seeing in terms of the increase in prices for, let's say, cable or other metal products which we consume in our projects. So how are we managing? So does our order book or the orders which we have, they already have price escalation clauses, or are we well covered in terms of the inflationary pressure?
The majority of the orders which we are having today, or the unexecuted order book today, you can say 80% of these orders are having price variation clause. So, it helps us, cover those raw material cost escalation. There are certain orders which are on fixed price also. So we are very much cautious about those things. And we take proper precautionary measures to book the material and to somehow block the things. So there are certain measures which we adopt to mitigate such risk.
Right. And maybe just a last question would be on data. So as you're saying that we are working hard to improve our working capital cycle, maybe from 3 times a year to maybe 3.5 or maybe 4 times in line with the other industry peers of the similar scale. In December, and I think there was a number in your presentation, the trade receivable, which looks a bit high. Maybe is that because of sales? Most of the sales in third quarter were done in November-December period, or there was any specific reason for increase in receivable in the third quarter?
Yeah, I'll just give you a brief of the total receivable. What we can see on December figures is 146 crores. Out of this 146 crores, 30 crores is retention. And rest of the amount which is there, it is well within 180 days. As per the industry norms, it is well within that 6 months period. So there is no such issues on that. Another thing what I would like to add, in this 9 months, we have done a billing of around 185 crores. Whereas the payments which we have received in last 9 months is 148 crores. So the things are on track. Rather, if we'll see debtor to revenue ratio, it will be on improving side. It is on further decline. So we are working on it, and it is getting better day by day.
Great. Great. Thank you very much, sir. Best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Chinna Satyanarayana, an individual investor. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Yeah. Sir, actually, can you give me a small hint about the share of niche product segment in the revenue achieved in the first 9 months of the current year, sir?
First 9 months?
Yeah.
First 9 months, it has been... How much? 4.27. It has been around 3%, and in quarter 4, it is going to improve further.
Okay. Actually, there are 3 products under development as per the investor call as well as the presentation is also concerned. New compact FPA and also the medium voltage switchgear and also dry compressed air reinforcement unit. And what is there any visibility for commercialization of these products, sir? In which year the investors can expect these products can be commercialized, sir? Especially the dry compressed product is having 38,000 crores addressable market as per the information given in the Concall. And it will be very nice to hear about the plans about commercialization of these products actually.
Yeah. I'll come to this dry compressed air insulated RMUs. Now, this is something which is a bit on as compared to existing RMUs in India, which are SF6 insulated. These are a bit expensive. Now, SF6 is a hazard to environment. But we need to, and we are working on convincing the market drivers like CEA, Ministry of Power, REC and PFC to go for these kind of products. Whereas the existing market for RMUs is being met only by SF6 insulated, where only few manufacturers are there. So here we have to again educate the user. We have to convince them on using SF6 free RMUs. So that process is going on. We are trying, but it will be very challenging for us to give some kind of timelines at this point in time. But yes, we are working on it. And just for our knowledge, these kind of RMUs are very much in use in European countries, even in China, even in South Korea and Japan. But in India, because of some or other reasons, we are still using SF6. So it has got a huge potential, but only thing is that it will take some time.
About the switchgear, sir, medium voltage switchgear, sir?
So medium voltage switchgear, yes, we are working. We have almost finalized our prototype. And after this prototype, we are going to send the product for type testing to this NABL laboratories. At the same time, parallelly, we are in discussion with few of our customers to use this product on a pilot basis. So at that stage, this development is.
So can we expect this to be commercialized in FY28, sir, then?
Yes. Vacuum circuit breaker, we will be able to do some billing in 26-27, something. And major billing will come from 27-28.
Acha. About the receivables, though it was indicated and it was answered in previous questions, especially when you are entering the EHV segment and the transmission segment you want to foray in a higher way, there the receivables haven't really more compared to the present business model of the company. I don't know how the company is gearing up the internal team to address this receivables issue, which we are seeing in many other companies actually. In power transmission, the major issue is receivables realization. And the receivables realization may stretch up to 24 months, 36 months also in many cases actually. And the kind of working capital you are envisaging, it may pose a good challenge to you, to the company. And another thing is, when you are envisaging 1,000 crores turnover in FY28, and for getting the 1,000 crores turnover executed, you should file the tenders at least for 5,000 crores. So for filing the 5,000 crores tender, you need a huge bank guarantee limits in the transmission sector. So bank guarantee limits requirement itself will be more than 200 crores. So I think the proper planning is required as far as the bank limits are concerned in FY27 itself, especially the way the company is growing. I don't know how you are.
I really appreciate your insights, sir. I would like to just throw some light on our planning and what we do. In transmission, there are two segments. One is substation and one is transmission line. In transmission line, because of the ROW problems and because of, right of way and land issue and all, I understand there is the projects gets stalled, the projects get delayed, and hence, money gets stuck. Whereas we are focusing only on substation, AIS substation or GIS substation, where the chances of having ROW problem is very less. Second, our strategy is that we are going with those kind of customers who have got a good reputation in making payments, like power grid and all. We are putting for those business. So we are quite confident that it is not going to affect our cash cycle because of addition of this transmission business. Again, as you said, working capital requirement. Very rightly you said, for 1,000 crores we need to have a bidding of 5,000 crores, and accordingly, we need to have bank guarantees also. Since we have tied up, as on date, from company point of view, we have got a very serious issue in terms of, or serious, you can say, hindrance in form of eligibility criteria. We are not able to bid for bigger projects. For that, we have tied up with a PSU, and those PSU is bidding for us, and it's a kind of a pre-bid arrangement where if this entire costing is done by our company, we are doing all the homework, and bidding is being done by PSU with their, obviously, their contribution and their margins. And with that, we are able to bid for projects, up to 1,000 crore single project also we are eligible to bid. So this is one aspect of this arrangement, that yes, we have enhanced our bidding capacity. Second, the most interesting point of this tie-up and this arrangement is that for these projects which we are going to bid through this PSU, we don't need to give a bank guarantee. Instead of bank guarantee, we have convinced them to accept surety bonds and insurance bonds. So, once this 10% PBG and those things have come down, it is going to help us in, working capital also. The pressure on working capital straight away comes down. So this is the arrangement what we have worked out to achieve this 1,000 crores with the amount of resources available.
Good, sir. Good, sir. Sir, another thing, actually, last time in the Concall also it was explained that you are pouring into battery energy storage system. Any update on that, sir, actually?
Yes, we submitted our bid for few tenders in battery energy storage system, and unfortunately the industry has been very aggressive. The kind of competition which is coming into it at this point in time, it is not making more sense. Though we lost few of those tenders, but we are not very much confident what kind of prices and what kind of margins will be sustainable in those business. So battery energy, we are going as per our calculations.
Right, sir. It's a good initiative taken by the company to give quarterly performance review, though it is not mandatory, and also for exhibiting reasonably good performance in the first 9 months of the current year. And all the best for your future endeavors, sir. Thank you.
Thank you. Thank you.
Thank you. Participants who wish to ask question may press star and 1 this time. To ask a question, please press star and 1 now. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, ma'am, you are audible.
Yeah, hello, good afternoon. Most of my questions have been answered. Just one query I had. So we mentioned that we had 120 crores of order inflow in quarter 3, but I went through the PPTs and in the last quarter we had around 409 crores of order book, and currently we have close to 418 crores of order book. So is this 120 crores of order including the L1, or are these orders that we've received the LOAs of?
These 120 crores are what we have received. The L1 orders, generally, we unless and until we have received the contract, we do not publish.
Correct. So the numbers are not matching, because we had a 409 crore of order book last quarter and now it's 418, and we had close to 60 crores of execution this quarter. So it comes around the 70-75 crores of just orders coming in. So am I missing something? The rest 50 crores I couldn't calculate.
Madam, this is Satyakam Basu. See, there are two kinds of execution. One is executed, revenue captured. Other is the work in progress. Okay?
Okay, got it.
So when we have got 120 crore of order, we have captured revenue of 60 crore. Okay, and the balance are work in progress. These are all EPC work, so many of the orders which goes on, so that's where the mismatch is in your mind.
Okay.
Otherwise, it's okay.
Okay, that is perfect. And the 200 crores of order inflow we are expecting in quarter 4, is that correct?
We cannot really give you the numbers for quarter 4, but as sir said already, yes, everything is online and we are expecting to exceed our projections definitely by the year end. Which we have already done consistently. We have done consistently. If you see Q1, Q2, Q3, we have always exceeded the expectation.
Oh, that is great. And recently we had some land dispute in Maharashtra. So such kind of disputes are common in the industry, or is there any more risk that we can face with the current order book we have?
Basically, any EPC project, especially if they are related to the ground, there sometimes problems come. There is only one order where we have the problem, but we have solved it now. It is solved. It happens sometimes, it's okay.
I'll answer your second part. Already I answered it earlier. Majority of our orders are roof mounted. In solar segment, majority of our projects are where we have to install these projects, solar panels or solar projects on roofs. So there we do not see any such problem. We have got only 3 ground mounted projects under execution. In one of those projects we found a problem. In the rest of the 2 projects it's okay. And in future also we are not much keen, or we are not going so aggressive on ground mount projects. So we do not anticipate any such occurrence in future.
Okay, that is great. Yeah, that is it from my side. Thank you.
Thank you. The next question is from the line of Rajesh Singla from BTG Capital. Please go ahead.
Thank you for taking my question here. So what is the breakup of the order book between solar and power T&D?
Just 1 minute, please.
188 crore from electrical.
In power T&D it is 188 crores.
And solar 220.
And solar it is 220 crores. Rest is from civil and other products and all those things.
Okay. So given that these solar projects usually have smaller gestation periods, so we can expect this 220 crore should be executable within next 12 months?
Yes. Yes. The project completion time is, comparatively less, 6 months and sometimes it gets extended, maybe 9-10 months we have to close it.
Okay. So most likely this 410 crore kind of order book will be mostly executed by September next year, right?
Few of the electrical projects, these are having a completion time of 2 years. So some of them may get, further extended, but majority of these are going to get, converted into revenue in this next financial year.
Thank you, sir. Thank you. That's pretty much from my side. Best of luck, sir.
Thank you.
Thank you. The next question is from the line of Abhishek Shah from Mastercard. Please go ahead.
Thank you. Just a disclosure, I'm here in my individual capacity and do not represent my employer. My question was with respect to the resignation of a key managerial personnel in charge of business development. Has that position been filled, or do you foresee issues in generating business due to the lack of an important position in marketing and business development? And if you could shed some light on the reasons for the discontinuance of service.
Can you come again, please? Can you come again with the question? I couldn't get it.
My question was with respect to the resignation of a key managerial personnel, Mr. Akhilesh Kumar, in charge of business development. I wanted to understand if that position has been filled and if you could shed some light into the reasons for the resignation.
The reason for his departure was that he was having some, he got some good foreign assignments. Maybe in some of the African countries, and we have already, maybe in few days we will publish that information also on media. We have already inducted a very senior person from the industry at level of President Business Development and Marketing. So we do not see any such issue.
Sure. Thank you. That'll be it.
Thank you.
Okay. Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions from the participants, I now hand over the conference to Ms. Janvi Patil from Orium Connect for closing comments. Over to you, ma'am.
Thank you everyone for joining the call today. On behalf of Sugs Lloyd Limited, we appreciate your time and participation. For any further queries, please reach out to us at letsconnect@orium.in. Thank you everyone.
Thank you. Thank you everyone.
Thank you. On behalf of Orium Connect, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.